This is your teacher Haris Bhatt and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve question from A2 Accounting. A2 Accounting from the paper 3 and the topic is basically profit and loss sharing arrangement. In partnership changes, we have a topic of profit and loss sharing arrangement which is going to come in your exams of February, March 2026. It will come. So this question, which is from profit and loss sharing arrangement, has come in May, June 2532. So it has come in your previous exam in May, June 2532, right? So let's discuss that. Ahmed and Betty were in partnership for many years, but they did not have a partnership agreement. The partnership statement of financial position at 31st December was as follows. Non-current assets are given: equipment 1,85,000, motor vehicle 1,48,000, current assets inventory, trade receivable, bank. Capital accounts are given Ahmed and Betty. Current accounts are given Ahmed and Betty. If you see, Ahmed has a current account, negative current account. It is basically a loss. So Betty has a 5,500 of profit, but Ahmed has a 9,500 of loss. Loan from Betty is given, which is 15,000. Current liabilities, trade payables are given. Betty retired on 1st January, right? 2025. Remember this, that whenever a partner is going to retire, we will have to give him his share of all the profits, including goodwill, at the time of retirement. So to Betty, we have to pay him the loan. We have to transfer the loan of 15,000 to him, right? Then the current account of 9,500 will also be settled. Either he is having a loss and his account is either closed with bank or with new loan or with both. On the same date, 1st January, Chandra was admitted as a partner on the same date. So one person is going to retire from the business and one person is going to admit into the business. We have done such type of a question in May, June 1143. After that, it has come now. There is no previous experience from 11 till 25. Okay. Ahmed and Chandra agreed to share profit and loss in the ratio of 3:2, 3/5 and 2/5. If you will see my video of guess video of May, June 2532, before the paper, I have clearly mentioned this, that this question is coming in which one person is going to retire and on the same date, another person is going to admit. Okay. So 3/5 and 2/5 is going to be the ratio. But previously, for Ahmed and Betty, the ratio was equal. Why, sir? Because there was no partnership agreement between them. So according to Partnership Act, profit and loss will be shared equally. Then following arrangements has been made after admitting Chandra and retiring Betty. Assets on 31st December were revalued as follows. Equipment 161,000, motor vehicle and inventory. Goodwill at 31st December was valued at 90,000. No goodwill account is to be maintained in the books of partnership business. The amount owed to Betty was settled in full on 1st January 2025. So whatever amount we are supposed to pay at the time of retirement to Betty, we are making him pay through bank. Because it is clearly stated that amount owed to Betty was settled. Settle means it has to be settled by check, by bank. Because if nothing is mentioned, we believe that we are paying it through bank. Chandra introduced cash to pay for her share of goodwill. Contribute capital so that the capital account balance at 1st January 2025 are in the profit sharing ratio. Make a loan of 40,000 to the partnership. So he's also giving a loan to the partnership of 40,000. He is supposed to bring amount according to his share of goodwill, and he will also contribute capital so that the capital account balance are in the profit sharing ratio from onwards. What is the profit sharing ratio? 3:2. So Ahmed for Betty retired from partnership and Chandra was admitted. So Ahmed and Chandra, Ahmed is going to have 3/5 share and Betty is going to have 2/5 share, right? So the Ahmed capital is 2,50,000 right now. So according to this, you can think that whatever the amount of Ahmed capital which will stay in the business, his profit and loss sharing ratio, the capital of Chandra should be equal to according to the profit and loss sharing ratio. You have to make this equal. What do you mean by this? That whatever the total capital of Ahmed and Chandra together, 3 by 5 should be 2,50,000 and 2 by 5 should be of Chandra's capital. It has to be equal to Chandra capital. We'll discuss it later on. Then you'll be able to clear it more properly. May, June 25, 32. State two reason why business may have goodwill. Because of good year of trading, because of good location, because of good morale of employees, because of motivated employees, because of retention of customers, because of better relation with suppliers, right? Because of good high quality of product. These are the reasons of goodwill. But that is inherent goodwill, existing goodwill. And existing goodwill will not be recorded in the books of account. State one reason why Chandra has to pay for the goodwill, because he has to pay the other partners for the goodwill they have created. Because he is admitting into the business, so he has to pay to give a true and fair view of the business for the goodwill which has been created by the previous partners. State three reason why a goodwill account is not maintained in the partnership books. Number one, as I discussed with you, that this is inherent goodwill, existing goodwill. Existing goodwill is created because of the good year of trading, and it is not supposed to be recorded in the books of account. Purchase goodwill is recorded in the books of account in business purchase. Number two, it is against accounting concept of money measurement, because goodwill has no money value. We cannot express his monetary terms correctly, so we will not record it. Then it is against prudence concept, because it is future profit. If prudence concept says that profit should not be overstated, so goodwill is a future profit which is not yet materialized, and we don't know the exact value of the goodwill also. Calculate the amount payable to Betty on 1st January 2025. So amount payable to Betty means he wants us to go for the calculation that what is the amount we have to pay to Betty, like here. Amount owed to Betty was settled in full. But rather than going for a calculation, because he didn't ask us to prepare a statement, I will go for a T account. I'm going to prepare the Betty capital account directly to see that what amount we are going to pay him as on his return. So I will prepare Betty capital account. No, other partners capital account are not supposed to be. He didn't ask us to prepare the other partners capital account, right? So I will prepare Betty. It might be possible that I have to prepare one more partner capital account. We'll do that. So I will brought down here first that whatever be the brought down of Betty's capital given in the question, that is 1,80,000. I'm going to write here 1,80,000. Okay. Then I have to write the loan which has been given should be transferred to his capital account, 15,000. How come, sir? I will pass the entry. See, Betty loan account debit 15,000 and Betty capital account credit with 15,000. Because he is leaving the partnership, so we have to pay the amount of loan back to Betty. We are not paying him in cash right now. We are transferring it to his capital account. His capital will increase with the amount of 15,000. क्योंकि हमने ये भी उसको पे कर दिया लोन के पैसे. Then next I have to calculate the goodwill. Goodwill is supposed to be distributed to him according to his share of goodwill, which is equal, because they were equal partners and the goodwill amount is 90,000. So goodwill debit, right? And the partner capital account is going to be credit with equal ratio, which is 45,000 and 45,000. Remember? See, goodwill debit 90,000 and A.C.M.A capital 45,000 and Betty capital 45,000.
Sir, equally,
this is how we do that. Huh?
Equally distributed to have now.
Yes. No, this is the old ratio. And when we talk about old ratio, there were no partnership agreement between them. So the profit and loss sharing ratio is equal. But when we are going to write off it according to the new ratio, I will do that also. That is 3 by 5 and 2 by 5. So what I'm going to do now, A.C.M.A capital account debit and then Chandra capital account debit, and goodwill is going to be credit, but that is in the new ratio. So what is new ratio? 3 by 5 and 2 by 5. Can you tell me? 3 by 5 is going to be 54,000 and 2 by 5 is going to be 36,000, if I'm not wrong, right? So we are done with this now. We have calculated the goodwill, which is supposed to be credited to Betty capital account, not to Ahmed, because we are not preparing Ahmed capital account. That's why. If we would have been preparing Ahmed capital account, I would have given him a credit also. Now, the most important thing, which is given in the question C, Ahmed introduced cash to pay off his current debit balance. So Ahmed is going to pay off his current debit balance. That is a separate point, which is given here. Ahmed debit balance is 9,500. So his current account balance will be finished and he is making the payment through bank. So what is going to be the entry? We will not write it right now. Ahmed current account debit, right? Sorry, Ahmed current account credit and bank is going to be debit. So current account will be over. Bank debit and Ahmed current account credit, because this is a debit balance, negative. It has to be credited and bank is going to be debited with 9,500. So we'll discuss it later on in the question. Now, how we are going to make the payment? The current account of Betty will be transferred because he is leaving the partnership. So I will write current account also here because he is going. So we have to give him current account will be transferred to his capital account. How come, sir? This is 5,500 and he is having a profit. So I have transferred his current account to his capital account. Okay. Next thing which will come is basically revaluation. Revaluation profit will be transferred to all partners, Ahmed and Betty, in equal ratio. So let's go for the revaluation. Equipment is 161,000. What is equipment now? 185,000. So there is a revaluation downward of 161,000. How much it will become? Can you calculate it? Ready? 185 minus 161. Yes. 24,000. So revaluation account is going to be debit and equipment is going to be credit. Why? Because the value of equipment is going to decrease by 24,000. देखिए equipment अब कितना revalue हो गया 161, whereas previously it was 185. Motor vehicle 148,000 and now it has been decreased to 117. Okay, 148 minus 117. Again there is a revaluation downward. 31,000 and motor vehicle is going to be credit with 31,000. Next is inventory. Inventory given in the question is 82,000 here, and now the inventory has increased to 1,05,000. So there is an increase of revaluation increase in inventory of 23,000. 18 plus 5, 23,000. So I will pass the entry inventory debit and revaluation account credit with 23,000. Okay. Now I will prepare the revaluation account so that the profit will be transferred to the old partners with old ratio, which is equal actually. So let's see. In the first entry, revaluation account is debited with 24,000 as a loss because of the decrease in equipment. Then again, it is going to be debited with 31,000 because of a decrease in motor vehicle. And then there is an increase in revaluation. Revaluation account is credited because of increase in inventory of 23,000. So there is going to be a revaluation loss actually. 24,000 plus 31,000 is going to be 55,000, right? There also come 55,000. And what is the difference? Which is basically transferred to Ahmed. Loss, debit side is heavier. There is going to be a loss, which is transferred to Ahmed and Betty according to their profit loss sharing ratio, old ratio, which is equal in this case. Yes. 16,000 and 16,000. So it means that this is going to be 32,000. So Ahmed loss, revaluation loss is 16,000 and Betty revaluation loss is also going to be 16,000. So because of this revaluation loss, his capital account is going to be decreased. So it will come on the debit side. Also, it will come on the debit side of Ahmed also. But here I'm going to write revaluation loss, and that is 16,000. Okay, that's it. Now I'm going to go for the total of the credit side, and I'm going to balance the both sides with the name bank, because all the amount which is supposed to be paid to Betty, we are making him payment through bank. So please tell me the total of the credit side, and then we will go for the goodwill. I have written already, which is going to be credited with 45,000. There is no debit in the goodwill because Betty is retired from the partnership, so he is not a new partner. There is no new ratio of him. Yes. So that's like the total 83,500. No, wrong. Please calculate it. जी मानूर बताएं.
245,500.
Okay, 245,500. I will write here also 245,500. Now the bank is going to be 245,500 minus 16,000.
229,500.
Yes, 229,500. So we have paid the amount to Betty through check, which is 229,500. Betty capital account debit, bank credit. You can pass the entry even after doing that. You can pass the entry also. Like I will do that. Okay. Betty capital account is going to be debit with 229,500, and bank is going to be credit because we are making the payment 229,500 through bank. Same is the case that A.C.M.A current account is going to be finished, as I discussed with you, because he is basically, canceling his current account by, bringing the amount of loss into the partnership, which is bank debit, and A.C.M.A current account is going to be credited with 90,500. So his current account is going to be finished because he was having a loss in his current account of 90,500, which is settled now. I repeat again, let's see this point. A.C.M.A was having a loss of 9,500. 9,500 means it is debit balance. Betty has a profit of, that is why it is having a credit balance. 5,500 will be credited in his capital account. We did that. 9,500 is a loss of A.C.M.A, and A.C.M.A reduces cash to pay off his current account balance, debit balance. Debit balance is going to be credit, A.C.M.A current account, and bank will increase, obviously. So asset of bank is going to be increased, and A.C.M.A current account is going to decrease. This bank has been put up by A.C.M.A into the partnership business. Let's move forward. The next part, which calculate the amount payable, we have done that. Right now, calculate the amount of cash introduced by Chandra. See, this is the most difficult point, I believe, in the particular question. Why? There is a reason behind. Because of the reason that we have to prepare A.C.M.A capital account also to find his closing balance. To find his closing balance capital account, because the cash introduced by Chandra is dependent upon A.C.M.A capital. How come, sir? I will show you. See, Chandra introduced cash to pay for her share of goodwill. What is his share? See, the total goodwill is 90,000, and his share of goodwill, which we have already calculated in the past, that is 40%. So he will bring 36,000 for goodwill in cash. Next, capital contribution मुझे नहीं पता. Loan he is giving 40,000, and what amount of cash he has to bring for his capital, that is dependent upon that he will contribute capital, so that the capital account balance on 1st January 2025 are in the profit sharing ratio. He is still a partner with A.C.M.A. So we need to see that what is A.C.M.A capital now to find whatever amount he is supposed to contribute as his capital share. So let's prepare the A.C.M.A capital account now. Which is quite simple and easy. The same we prepared in the past. So I will write here brought down for A.C.M.A. Let's see what is A.C.M.A brought down. A.C.M.A brought down is given is 2,50,000. I will not write current account now in A.C.M.A's account because A.C.M.A is already a partner. Current account will not come in his account. जो पार्टनर कंटिन्यू कर रहा होता है उसका करंट अकाउंट उसके कैपिटल अकाउंट में आता भी नहीं है, याद होना चाहिए था। जो छोड़ रहे होते हैं उनका आता है हमेशा। तो वैसे भी उसने खत्म कर दिया था क्योंकि वो बैंक से पैसे ले आया था अपने। फिर आपका क्या आएगा बेटा, रिवैल्यूएशन लॉस। सो दैट इज गोइंग टू बी डेबिटेड एंड रिवैल्यूएशन लॉस फॉर अहमद इज same 16,000. Then he is going to give, we will give him credit for goodwill. His share of goodwill is 45,000. And now we will debit goodwill also Sikandar, because we have to write off goodwill also in his account, which is 54,000. Kaise sir? Just go down. Ahmed capital account is credited because of goodwill 45,000 and then debited because of goodwill 54,000. It's the capital account, we have to prepare that. Okay, we could have prepared Ahmed capital account together also. That is a possibility, but this is done. So let's find the carried down of Ahmed capital account. What is the carried down? Sir, why carried down? Because Ahmed is not leaving the partnership. He is a part of partnership business. So the total here is going to be 295,000 minus 16,000 minus 54,000. We will get the carried down 225,000, right? So 225,000. Now the carried down is 225,000. Chandra is supposed to bring his share of goodwill 36,000 cash, then 40,000 as a loan to the partnership because we have paid back the loan to Betty. So he is bringing the loan. Now 15,000 we have paid back. Then the capital he is going to contribute, Chandra, that is should be equal to the profit sharing ratio between Ahmed and Chandra. It is 3/2, 3/5 and 2/5. So it means that 2,25,000. We can find the total capital. 2,25,000 is equal to 3/5 of total capital, right? So total capital is going to be 2,25,000 into 5/3 or multiply by 5 divided by 3. What is the amount?
375,000.
375,000 is the total capital, and out of the total capital, 2/5 is going to be the capital for Chandra. Chandra should bring the capital of 3/5 of the total capital of 3,75,000. So how much it will become? Yes, that is going to be 1,50,000. So now we can easily assess that Chandra will bring how much? The goodwill cash he will bring with an amount of 36,000. That is 90,000 into 40%. The loan he is going to bring for 40,000, and the capital which should be in profit sharing ratio with Ahmed, that is going to be 1,50,000. Why, sir? Because he has clearly stated that the capital should be of that much amount that their ratio, profit sharing ratio, it should be equal to the profit sharing ratio. The capital should be. So the Ahmed capital at the end is 2,25,000, which is equal to 3/5 of the total capital. The total capital is 3,75,000. 2/5 of that should be the capital of Chandra. So he will bring 1,50,000 as his share of capital. So what is the total amount? He has to bring 2,26,000. So the cash contributed by Chandra into the business is goodwill, right? Then 40,000 is going to be the loan, and then we have shown that the amount is going to be, the capital is 1,50,000, total is 2,26,000. Okay. Now let's move forward. Next part of the question is, I can understand this is difficult. I can understand that you might not be able to solve the question 100% correctly. It doesn't matter. Prepare the statement of financial position of the new partnership. And 8 marks are there, and then the question is going to complete. So now we have to prepare the balance sheet actually of the new partnership. So let's do that. the most important part, statement of financial position. And in that, even in this particular part, there is a big difficulty level. Why? Because of the cash bank figure, which is difficult to understand and calculate also. We'll do that accordingly. प्रॉब्लम हो तो आप मुझसे पूछ भी सकते हैं, इशू नहीं है. To start, we'll start the statement of financial position with non-current assets. First of all, we are going to have equipment. Then we are going to have motor vehicle. Let's see. We will use the new amount of equipment, 161,000, and new amount of motor vehicle, 1,17,000. Why? Because their value has been decreased. We have done that. So there is no reason to be panicked because of this. 161,000. That is, I believe that this equipment. Yes, and 117,000 is going to be the motor vehicle. Let's see if there is any other non-current asset whose value has remained the same. It's a possibility. There is no one. So let's go for the total of this. Then I'm going to write the current assets also. G. What is the total of this? Total of non-current assets, both of them. Please tell me. Then I'm going
278.
What is the amount? 278,000. I'm going to write here 278,000. Then I'm going to write current assets, and in which, first of all, we will write the closing inventory. The closing inventory value has been increased actually, and it has been increased to 1,05,000. So I will write simply 1,05,000. Then comes the trade receivable. There is no change in trade receivable. So the amount of trade receivable will remain the same because there is no revaluation increase or decrease. That is 76,500. And then we have a bank figure also to be written, which I will write just after some time, and we will get the total assets. I will write the bank figure afterwards purposefully. Now, in the capital and liabilities section, we have to prepare. I have to write capital first. And there are two partners now which have capitals, which is going to be A.C.M.A and Chandra, right? These are the two partners. And the capitals have already been known to us. The A.C.M.A capital, what is the amount of A.C.M.A capital? We have calculated that is going to be 2,25,000. And the capital of Chandra is going to be 1,50,000. So why 1,50,000? Because it is clearly stated that he will bring his share of goodwill, the loan also, and his capital should be equal to the profit loss sharing ratio. So we have made the capital actually to 1,50,000 by ourselves, which is known as the topic of readjustment of capital. If you remember, readjustment of capital, where we change the amount of capital according to the profit loss sharing ratio. It has come many times in the past papers, but not with retirement and admission both separately. In admission and retirement, we have seen that. I can show you many questions in this regard. Then I have to write non-current liability, which is the loan basically.
The total of capital is 75,000.
Yeah, sorry. Then I have to write non-current liabilities. That is the loan given by Chandra. It's a liability now, and that is the amount is going to be how much? 40,000 is the loan. Then comes the current liabilities, and there are normal current liabilities given. Only one of them, that will be trade payable. So let me correct it. This amount. This is 3,75,000, and I will bring this up together also here. Then non-current liabilities, then current liabilities. So the trade payables, we will write the same trade payables which are given in the question, which is 71,300. Loan, Betty loan has been paid back, right? There is no current account now anymore, right? So 71,300 is the trade payable. So let me write 71,300. So what is the total here? 3,75,000. Now you can get the total liabilities first. Total equity and liabilities, total capital and liabilities. What is the amount? Remember this
486 300.
486 300.
3,000.
486 300.
Hmm.
I will write here also. Obviously, the liabilities should be equal to the total assets. So this amount will be the same also, 486 300. Now you can take the balancing figure also. If you are not able to calculate the bank figure, you can take the balancing figure also. But I'm going to calculate the bank figure now for you to understand the last part of the topic, last part of the question. If you see that the bank is given kitna 20,800. Now let's calculate the bank figure. See, 20,800 is the positive bank balance at the start. Then what happened? Ahmed has brought capital for the current account, cash for the current account debit balance 9,500, right? Then we have paid Betty how much? 229,500, which is subtracted from the cash. It's just a bank account. Then Chandra has brought 36,000 in the bank as a share of goodwill and loan of 40,000. Just calculate it. You will get the closing balance of the bank account. So you can find the closing balance of the bank account. What is going to be the amount for this?
Negative 1 to
And 1,50,000 more, which he has contributed as his capital. Then you will find the bank figure, which is going to be a positive one. You can prepare the bank account also. You will write on the debit side, brought down 20,800.
26,000.
Okay. So you can write brought down debit balance 20,800. Then on the debit side, Ahmed 9,500. Then credit side, you will write 229,500. Then you will write on the debit side 36,000 because of goodwill, because of loan 40,000, and because of Chandra capital 1,50,000. You will get the carried down 26,800. That is going to be the answer, 26,800. But you can take the balancing figure also if you are not able to find it. Now all the three totals, three current assets becomes 208,300, and you will get the total assets 486,300. So this is how we have done this particular part of question. Hopefully it will not come in your exam in May, June, but if it will come, you will enjoy a lot. But it is going to come in February, March, I'm telling you. And this type of question or profit loss sharing arrangement can also be a part of the question. So this is what A-level is all about. This is a normal question of A-levels. Because you have never done that in your whole life, and you will never do that in your whole life except in your exam. This is what is happening in the whole world, and that's why A-level is difficult. It's not difficult. You are not prepared for that. You have not been asked to prepare for the A-level exams. खैर देखिए इसमें कोई मसला है तो मुझे बताएं, मैं दोबारा रिपीट कर रहा हूँ. Any problem? We can discuss that. जी अनुषे या मानूर, कोई मसला है तो मैं रिपीट कर रहा हूँ, दोबारा से रिपीट कर रहा हूँ पूरा क्वेश्चन. चलिए. The thing is this, that one person is going to retire from the partnership business, which was Betty. So you prepared the Betty capital account, brought down was 1,80,000. Then his loan will also be transferred to his capital account because we have to pay him his share of loan and his share of goodwill and all the revaluation also. So loan will be credited, goodwill will be credited to his capital account equally, and current account that will also be transferred to his capital account. Why? Because he is no more a partner. उसकी कोई भी चीज, चाहे वो करंट अकाउंट है या कोई भी चीज है, वो बिजनेस में आप मौजूद नहीं रहनी चाहिए. तो करंट अकाउंट में इसका प्रॉफिट था, वो भी उसको देके घर भेजना. रिवैल्यूएशन लॉस हमने रिवैल्यूएशन अकाउंट बनाया, एसेट को डिक्रीज इंक्रीज किया, एंड रिवैल्यूएशन लॉस विल बी ट्रांसफर्ड टू हिज कैपिटल अकाउंट ऑन द डेबिट साइड, एंड वी हैव पेड हिम थ्रू बैंक 229,500. I passed the entry Betty capital to bank account also. Then we have prepared Ahmed capital account who will continue with the business. The brought down is 2,50,000. His share of goodwill is equal to the Betty. 45,000. Revaluation loss still same because they are equal partners, 16,000. But his goodwill will also be debited because goodwill is written off among new partners with new ratio. So 54,000 will come on the debit side of Ahmed capital account, and carried down is 2,25,000. Now, the Ahmed has bring some amount into the partnership business to eradicate his current account. So Ahmed current account has a loss, debit balance. Now it is credited and bank is going to be debited. The asset of bank is increasing and current account loss is going to be finished. Now it is clearly stated that Chandra, who is admitted into the partnership business, he will bring his share of goodwill, which is 90,000 into 40% becomes 36,000 in cash. He will bring a loan also. He is going to give a loan to the partnership business of 40,000, and he will bring more cash as his capital. But that capital amount should be equal to the Ahmed's capital and should be in profit loss sharing ratio, new profit loss sharing ratio. So Ahmed capital is 2,25,000. That is equal to 3/5 of total capital according to the new ratio. The total capital is 3,75,000. 2/5 of this should be Chandra capital. So 1,50,000 he will bring as his share of capital. The total amount of cash brought into the business through bank is 2,26,000. Yes.
Sir, why didn't we credit 9,500 in Ahmed's
Yes.
capital account?
Yes. I will let you know. The problem is this, that 9,500 is basically a debit balance. See here, it's a partner current account loss. When you are going to transfer loss, or you are going to eradicate loss, you have to give it a credit. So partner's current account is going to be credit. It is finished. And why it is finished? Because Ahmed has brought cash into the business with the same amount of 9,500. So that was the reason. And then we have to prepare the balance sheet with new values of equipment and motor vehicle, closing inventory, new value, trade receivable is the same. Capital we have already calculated, 225 and 1,50,000, total is 3,75. Loan from Chandra has been given to the partnership business, 40,000, and trade payables are the same. Bank figure we have to calculate. The starting bank balance given in the question is there. That is 20,800. Then 9,500 cash has brought in to the business by Ahmed. 229,500 we are paying to Betty, and 2,26,000 of the cash has been brought by the Chandra into the partnership business. Goodwill 36, loan 40, and 1,50,000 of his capital. Thank you very much. Any problem you can ask me. This is how we have gone for